Hi, I'm Andy Myers, joining you with the latest news on the global financial industry from Weiss Ratings. Weiss has expanded its coverage of the industry to include global banks, including some of the world's largest. It found that the weakest banks and bank holding companies are concentrated in Europe and Asia, while the strongest financial institutions are based in Latin America, the Middle East, and North America. In fact, 42% of the weakest banks, those rated D+ or lower, are based in France, Germany, and the PIIGS countries of Portugal, Italy, Ireland, Greece, and Spain. You can see that 8 of the 10 largest global banks receiving weak ratings are in continental Europe or the United Kingdom. At the top of the list is Deutsche Bank, the biggest financial institution in the world, with assets of $2.8 trillion at the end of last year. Weiss gave it a rating of D because of its poor profitability and low tangible common equity ratio, a measure of capital. In addition, Deutsche Bank earned a return on assets of only 0.1%, a fraction of the industry average of 0.9%. That suggests the bank has a significant probability of future financial difficulties. Weiss Ratings senior banking analyst Jean Kirsch says, "Our analysis underscores just how severe Europe's financial crisis is, despite imposed austerity measures, while financial institutions in emerging markets have largely bypassed the recurring debt crises of recent years. And with fears over a euro breakup mounting, European banks could easily face a new and more tumultuous round of financial troubles." Meanwhile, the biggest US-based global financial institution considered weak by Weiss is Bank of America, the 10th largest bank in the world with assets of $2.1 trillion. B of A reported return on equity of negative 1.5% last year, well below the industry average of 10%. This reduced profitability is due to prior bad loans and restructuring of non-performing businesses, and it resulted in a D+ rating from Weiss. Conversely, the strongest global banks are largely based in the emerging markets of Latin America and the Middle East, and are generally smaller in size. Jean Kirsch says that with a more focused lending and investing strategy, smaller banks in nations undergoing rapid growth and industrialization were able to remain stable and prosper despite the global economic crises that began in 2008. The two highest rated banks in the world, Qatar National Bank and Al Rajhi Bank, are located in the Middle East. Both earned a Weiss financial strength rating of A, based on their solid capital positions and strong financial results. Qatar National Bank reported 20.9% in Tier 1 capital, almost double the average of 11.5%. In addition, non-performing loans represent only 4.6% of Qatar's core capital versus an average of 31.5%. And the bank also enjoyed a return on assets of 2.3%, more than double the global average. Similarly, Saudi Arabia's Al Rajhi Bank has strong capital, profitability, and liquidity. It has a high risk-based capital ratio of 18.9%. Both its return on assets of 3.2% and operating income to assets of 3.3% are well above average. And at 9.66%, its cash and equivalents as a percent of total liabilities is almost double the global average. The list of Weiss financial strength ratings on 206 global banks is available at weissratings.com/global bank ratings report. For more information on Weiss Ratings, please go to weissratings.com. Thank you.